February 15th, 2024. The only real measure move we got up today was up. It was essentially this wedge. So we got 1, 2, 3, and then we got a measure move up when we got the breakout above on bar 44. We barely touched it, and we just got there at the very end of the day, but we still got the measure move up. Why are we getting, a measure move? I thought there was a couple important things about the breakout. I'll say that. One was we broke out above yesterday's high, or above the day's high, and we did not retest it on 45. So you can see the bears who sold the high of the day, they remain trapped, which, I don't think they'll stay trapped forever. I think tomorrow, if we start to sell off tomorrow at any point, I would say this is going to be a pretty big magnet because the traders who sold above this high, we're expecting to be able to scale in and get out around break even. I'll also say, I thought 42, maybe it wasn't the best sell in the world, but it was definitely reasonable. And the traders who sold below 42 and sold above 43 got trapped on 44 as well. So you have a couple sets of trapped traders there. One of the things making 44 a likely reasonable buy. But when you take that buy, again, you're hoping for the measure move up somewhere up here. And one of the things that was interesting was 44 was a really big bull bar. And it got kind of bad follow through on 45. You can see we had a big tail on 45. And some traders would argue that this is the spike and now we're in the channel phase and this was the channel. Obviously, it ended up being more like this was the spike, pullback, and then channel. But, on a smaller time frame, this was the spike and this was the channel. And that's why we ended up getting a measure move up of bar 44 specifically. And that's why we found sellers around 49 because traders got exactly a 1-to-1 of their initial risk buying above 46 or above 44. And that's where we found profit taking. Bar 1, a bull bar closing near its high, but I thought the context of the past day was important in that this was a really, really tight bull channel, and then 1 was a big breakout attempt above the high of the bull channel. And breakouts above channels generally fail. It's climactic behavior, a breakout above a channel. So it was most likely that this was going to lead to sideways trading and not a big bull trend. Additionally, on the overall chart, you can argue this is some sort of wedge, 1, 2, 3, but you could argue 1, 2, 3, 4. So it's not all that clear, and we can definitely continue up as we are in a tight channel or a reasonably tight channel. That's my overall. Well, that was more of a daily chart opinion. But anyways, bar 2, bad follow through for the bulls who bought above 1. And then bar 3, traders bought above 1, disappointed 2, exited around break even during 3, and that's what's causing the selling here. Are you selling 3? No, I think that, in general, the bull move yesterday was too tight for me to want to sell. I thought, we probably needed to have some sort of attempt down and then a pullback, and then that would be something that I could sell. So I thought that in general, it was too tight of a channel to be selling anything like 3 or 5, etc. Bar 4, lack of sellers doing 3. Traders, bulls might exit below 3, so that might be why traders bought the close on 4. And bull bar on 4, triggering the high 1 above 3. But it's really not that good. You're really high in, a little bit of an overbought market here. And so you're expecting a couple legs sideways to down. Big outside down bar on 5. So it's an expanding triangle, right? The 3 low, the 5 low, the 2 high, the 4 high, the 5 high. So we have an expanding triangle, which really is just trading range price action. And we're probably going to get some breakout attempt. We're obviously going to get a breakout attempt, but, a lot of times in expanding triangles, since it's trading range price action, the breakout attempts fail. And you can see we had bar 6. Bulls see bar 6 as a high 2. They saw you had the whole big bull move up from yesterday come into here, and then 1 pullback 2. So 2 legs down, high 2 buy above 6, but a tail on the top. Bears would argue they're hoping 5 is the high of the day and 6 is just a pullback. Follow through for the bulls on 7, but a doji bar. And then a big bull bar on 8, probably just bears covering shorts. Bears wanted the low 1 to close near its low, but it didn't on 7. So they flattened at the market, causing 8. Do you buy above 8? Probably not. I think, you maybe can, as strictly an always in trade, it's probably okay, but we're so overbought overall. And look how big 5 was. Do you think this is going to be another big bull trend day? I didn't really think it would be. So kind of tough for me to want to buy up here. And then disappointment on 9, and then a bull bar on 10. But what does this look like? Buy, basically small climax, but good bull bar, pause, good bull bar, pause, good bull bar. So essentially think of it, good bull bar, pause, good bull bar, pause, good bull bar. Essentially think of it as a parabolic wedge. So on some sort of smaller time frame, this is a parabolic wedge. And that's why we ended up getting a failed breakout and such a deep pullback on 11. But the bulls buying 11, they know it's probably a scalp. They bought around 50% correction, and they're really just trying to get back up to here. They know that, if 11 closed on its high, bulls would have bought, maybe bought above it, looking for a measured move up to here and a breakout above the parabolic wedge. But how many times, do you see a breakout, above something like this really end up being successful? It's probably not. We're just pretty overbought in general. Additionally, remember when I mentioned that Monday's low would probably be resistance if we got there because of the daily chart? The traders who sold below this low probably going to be disappointed in this and who bought below this low probably will be disappointed in this and trying to get out around break even. So I thought when we initially got there, we would find sellers. And you can see we essentially, we came within 2 ticks of it on this bar. I consider that close enough to be tested. And that's exactly why, one of the reasons why we got so many sellers on 12. There were plenty of reasons why there were sellers, like the ones I just mentioned. But the daily chart also added to the sellers, causing the big bear bar on 12. 12 obviously negates the odds that we're going to get a bull trend day today. But it's really hard to want to sell after, 6 straight bull closes. Bad follow through on 13, a big tail on the bottom. So probably, not going too much lower. 14, an inside bar. Can you buy above 14? It's probably not the world's worst swing buy, but I'm not sure that it's like, it's all that great. I guess, well, I'll try and say, I'm talking in a more technical sense here. I thought that it was okay because we would probably get a second leg up from this, but the problem was this was really strong. So if you're buying, you might need to have a bit of a wide stop somewhere down here because we could easily get a little bit more to the downside. Overall, I thought that this was going to get a second leg up in some capacity. I just wasn't sure when, and I thought that it might be, we still haven't reached that target, so that might be a target tomorrow. And I thought that overall we might have to pull back a little bit deeper. Does this look like enough of a correction for this move, just this much sideways? It might be, but I think that it was a lot less likely. So I thought that if you were going to buy above 14, you needed really convincing follow through rather quickly. And instead, you got a bear bar closing near its low on 15, but really just around the 13 close. Any bear who sold 12, 13 going to be disappointed with 14 getting out around break even 15. Bull bar on 16, maybe some sort of final flag forming for the bears here. And you can see we got a failed breakout below the final flag. But 16, a good bull bar, but it's a double bottom, really not all that great. And you get bad follow through 17 and doji bar 18. So if you bought above 16 or 17 or 18, what you want to see? No, not really. You know that we're probably going to get back to the 11 close at some point today, but we don't necessarily have to. And then you get a surprise bar on 19. I think 19 makes the market pretty clearly always in short. My only problem, my main problem with selling 19 was how strong this was. So it was just a lot less likely that we were going to end up getting a big sell-off here and essentially some sort of vacuum test down of, any of these magnets. But I thought it was reasonable to sell 19. You are also kind of selling, somewhat the bottom of this channel. But I overall thought it was okay since I thought 19 pretty clearly flipped the market to always in short. And bulls who are long for any reason are probably going to get out below 19. And it was a breakout of the 18 bar range. So overall, I thought it wasn't unreasonable to sell 19. And you get follow through on 20, but it's really not all that great. You have a big tail on the top, a big tail on the bottom. So it's okay to be short, but you have to realize that a lot of times here, you're going to end up getting disappointing follow through, looking like a couple pushes down. And then you get 21, disappointment for the bears. A bear bar closing near its low 22, it's a low one short, but you don't want to sell low ones unless you're, in the clear spike phase of a trend. And that's not what we are here. We're in possibly 1, 2, maybe 3 pushes down, but the reality is I think we're going to get a deep pullback. And you can see the traders who took the sell below 19 were disappointed in 20 and 21 and are getting out around break even during 22. That's causing a lot of this buying. During 24. It's causing 23. That's causing a lot of this buying. 24, outside up bar, but big tails, big tails. When I saw 24, my thought to myself was, I want to buy, but I wanted to buy down here. And just by the fact that I wanted to buy down here, I wanted to pull back and then some sort of double bottom or clear wedge I could buy. Just by the thought of the fact that I wanted that made me realize I'm probably not going to get it because on trading range days, you don't really ever get what you want. 25, disappointing follow through if you bought above 24, but I don't think anyone is. Overall here, bears think 2 legs up and want a good low 2 short. Bulls think, lower, fail breakout below the 18 bar range. Maybe we'll try to break out to the other side. 25, disappointing follow through. And then 26, a good bull bar closing near its high. I think 26, Bears might argue 1, 2, 3, but I thought 26 was potentially strong enough to reset the market cycle. And you could look for a measured move up here. What's the problem with buying 26? Well, if you're buying 26, you're buying, basically right at the top of the most recent sell climax. So that's really not what you want to be doing. And you're also buying kind of smack in the middle of a trading range day. I don't know if it's the exact middle, but it's probably pretty close. So you're closer to the upper third, but you're buying in the middle of a trading range day. So if you're buying above 26, it's a time sensitive trade. You want to see 27 basically look exactly like 26 did. And the bulls did a good job. You can see a lot of bulls bought immediately right when 26 closed, as it never even traded one tick down. But they ended up getting kind of disappointing follow through on 27. If you bought above 26, you wanted 27 to be a bull bar closing on its high, basically the same size as 26, and you just didn't get that on 27. And so then a lot of traders, when they see 28, they get out below 28, and that's what's causing the big bear bar on 29. Bulls who are hopeful of a trend, but they know that this is, a time-sensitive trade since you're high in a trading range, and so they're going to be quick to get out. And that's exactly what's happening below 28. Traders exiting, and suddenly they'll flatten out the market around the close of 27, figuring that's reasonable too. And that's exactly what happened. 29 here, why you get such a big bear bar. 30, an inside bar, high 1. I think you can buy it. Because if you're buying it, you think this is a wedge and you're looking for 30 to break out above the wedge and you want a measured move up. And if you took the buy, and you set, I suppose if you set your OCO and just walked away for a couple hours, it would have been filled. But I think really hard to sit through this reversal on 42. I think you probably have to get out below 42. I just don't see any way bulls could. So that was what I was looking at today. I don't think today was an especially easy day for stop order traders. I think it was kind of difficult. I really just don't see a way you buy above 30 or buy anywhere on the way up and look at 42 and don't think you have to get out. I think bears have to get out, or bulls have to get out, and bears can sell there. Follow through 31 for the bulls and an inside bar on 32. If you bought above 30, 31, 32, maybe not the follow through you're looking for, but still a tight bull channel. Your premise is probably still valid. Follow through for the bulls 33 and 34. So we do get back to this close, but we find sellers 35. 35, not quite closing here, it's low. It's a couple legs up. 36, another good bull bar. At this point, I probably would be relatively flat. I get the logic that we probably have to get a breakout at some point today, and it's probably got to, it might go for a measured move. This doesn't have to do anything, but this daily range is relatively small, 18, 19 points. And the past couple of days have been pretty big. So it's reasonable to think that we're going to get, the daily range to double. But if we're going to get the daily range to double, you get 33, 34, you're thinking, okay, need another good bull bar. You don't get it 35. You get 36, you think, okay, what if we get follow through 36? You don't get it 37. So, if we're going to get the daily range to double, you're going to get stronger bull bars closing near their highs and not just this, bull bar hesitation, bull bar hesitation. This is trading range price action. So it's not as good and can easily reverse. Inside bar, 38, very small bar. At this point, I'm thinking the day is going to go more sideways. Bad follow through, 39. It's a bad high 1 at the top of the trading range. And then we failed to break out of the high of the day on 40, outside down bar. 41, again, this is a tight trading range, 37 to 41. So not really expecting anything other than sideways. And then a surprise, 42. I did sell 42 and I got trapped on the way up. I ended up pretty much exactly break even today. I lost like very, very small amount. I thought that 42, maybe I'm wrong, totally could be wrong, but I thought it was reasonable. I thought that, the underlying problem with 42 is that this rally is relatively tight. And more so than that, there was this, which was really strong. So I think my underlying problem with 42 was there was a lot of buying the day before, and there was some buying here. This wasn't obviously as strong as this, but the reality is, the Bears haven't done too much. They haven't really gotten a lot of follow through in the past, like 100 bars. They really just haven't gotten a lot of follow through on pretty much anything that they're doing. So that makes it a little bit worse of a sell below 42, I think. And like I said, how tight this channel is. Additionally, if you're doing that, even with that fact, I think it's okay to sell 42. But where I might have screwed up was when you see 43, it's a bear bar, it's a bear bar, but it's not quite closing near its low. It's essentially a doji bar. And a lot of traders will see that. And I assume they'll start to exit at the market, causing 44. Now, we did get a micro gap down on 44, meaning that traders initially sold the close, but you can see that pretty much, traders were still expecting it to be as a time sensitive trade, knowing that, we need, if you're going to sell below 42, you need to see follow through. We need to go, maybe get down to this magnet, within a couple, like 3 or 4 bars. You want to see strong bear bars closing near their lows, and this is a trading range, so it's probably just not going to happen. So as traders get disappointed in this and we start to rally more and more, the rest of the traders start to exit, just giving up on the idea that this is going to be a bear trend. And that's what causes 44 to close so strong. Again, bulls want the measure to move up. 44, a breakout above a wedge, a reasonable buy above 44 for a swing. Follow through 45, but a tail on the top, not as good as it could be. Follow through for the bulls 46, a good bull bar closing near its high, but this has, this is the strongest breakout we've had today for sure. But there's, a small tail on 44 and there's a big tail 45. Good bar 46, but I'm expecting 47 to be something disappointing because the bulls in general over here want, strong bull bars closing at their highs, and they don't seem to be getting it. 47, disappointing doji bar. Generally, when you have a buy the close market and then you get a doji bar, the buy the close will come to an end within a couple of bars. 48, another good bull bar closing near its high, but this is a bull channel. We're probably getting pretty high in what will end up being a trading range, but you still do have sets of trap traders, which I talked about at the beginning of the video. 49, bear bar, it's a doji bar. Do you have to get out below it? No. Can you? You can probably get out below 49. I bought the close of 47 and I didn't get out below 49. I bought more during 50, which probably wasn't even the best idea, but I ended up getting out of that, like over here. So I didn't really make much on it. And I sat in it. I sat in it for like an hour and a half and I didn't really, make any money. So that's kind of the problem with trading range days. Is that by the time the move is clear, it's clear on 46, it's probably most of the way over. So 50, a bear bar, but a big tail on the bottom. And, it just looks like we're going to go mostly sideways. And 51, you can see the bulls who got the close of 48, disappointed 49.50, selling out around break even during 51. So trading range day, traders quick to get out, and that's causing the selling on 51. Inside bar 52, not all that great. And, bears see a low one short, but it's not all that good. Probably sellers above, probably buyers below. 53, bull bar, but didn't close that strong. I think bears sell above 52, hoping that 53 is going to be an outside down bear bar. And they're hoping that just maybe they can catch a swing. They'll sell above this bar, looking to scale in a little bit higher. And they know one of two things is going to happen. They know either A, they're going to sell, and they're going to sell more higher, maybe even at the new high of the day, and then they'll have a chance to get out like they did on 57. Or they'll sell something like 53 will close outside down, and we'll have a chance of getting back to maybe this high, and they'll make a much bigger profit, or maybe even here if they're lucky. But it ends up being a bull bar, and a lot of those traders just end up flattening around break even, and that causes the bull close on 54 near its high. Do you buy above 54? I think if you're trading always in, it's okay to buy at 54. Follow through 55 and 56, but big tail on top of 56. Clearly a failed breakout, and a lot of traders, were long and hoping that this was the start of a reasonably decent second leg. I think everyone knew that the bears who sold above 49 were going to make money, but I think a lot of traders just thought we were going to get a bit better of a move up, and you got a lot of disappointment 56, and that's what causes all the selling. 57, if you're long, your stop's probably still below 51, so you're fine. Bull bar closing near its high 58. So bulls, again, you can see they're clearly willing to buy pullbacks, but they're not as willing to buy at the high. No one buying at the high, no one buying at the high, no one really buying at the high. So 58 closing near its high, a good bull bar, but never even triggers 59. Buyers below 59 and below 58 during 60. And then a bull bar 61 closing, reasonably enough. And then 62, a bear bar. I think exit below 62 if you're long, and then just buy it back above 63. I thought that, 62, it was a couple pushes up. You had a spike and a channel. The channel is 1, 2. And the channel is 1, 2, 3. So I thought, maybe not as great to be selling up here or to be buying up here, so not as great for the bulls. So exit below 62. My brain's just really fried today. Outside up 63, follow through 64, 65 for the bulls, but we're pretty high in a trading range. 64 was a good bar, but big tail on 65 could cause problems for the bulls. I think a lot of traders will exit below 66. And then, expecting a couple legs sideways to down would start, you had 67. Anyone who stays in during 66 was disappointed in 67 and then just flattened at the market. They were hoping 67 was going to be a bull bar closing on its high, trapping a lot of the bulls out, but it didn't end up getting that. And then we pretty much got a 2 legs sideways to down, a high 272, not that great, and tested all the way back to the low close and then got a rally into the close. Overall, it ends up looking like a bull trend day on the daily chart, but I don't think this was the easiest day for stop order traders. I think this was actually a pretty, one of the more difficult days we've had in a little bit. So, in general, on today, I thought good stop order trades, maybe 19, but probably get out somewhere in here. You can't wait for a bull bar closing near its high, because then you're going to get stopped out basically. So if you're going to sell this, you probably got to find a way to get out of break even in here. Maybe 26, but you got to get out below 28, I would say, or have a wide stop. 30 is probably fine. Maybe 34, just straight always in. I'm sure I'll disagree with my own opinion in a couple of years, but I thought 42 was fine. 44 probably okay, and 47, 46 probably okay. And then always in, so 54, maybe 58, but this not like super not ideal buys. The daily chart, we are getting a rally, so I think what'll be important is the open of the week next week. Bulls want another bull close. They've had a lot of them. I think they will end up being disappointed. So I would say going tomorrow, I do think we're going to close below the open of the week. So be prepared. If we start to rally earlier in the day, could be prepared for a violent move later in the day that makes those traders exit and get it below the open of the week. All right.